Good morning, everyone. This is Anne-Marie. Today's Thursday, February the 21st. My goodness, almost 2 months gone in the year. And we are looking at SPY. Yesterday we had quite a move, right? I was expecting the targets that I had set on the day were tight, right? And so I was looking for choppy price action in here. We popped up over the day before, got that big move to the upside, came down, thought we would test this region here, ran right through it. Guess where we are? At the base of the gap created by the last move. So, what's the trade today? You know, let's copy that. Hang on, you're with me right here. All right, we've got it at the base of the gap. Natural stop event, folks. A lot of times we go, well, I don't know where it's going to stop. You know, market moves are truly not arbitrary. They do come into certain levels. Sorry, that's me, the anal retentive, trying to get these numbers even, but that's not going to happen. So I'll just leave it alone. Okay, so here we are at the top of the gap. Here's the base of the gap, just underneath support level 3. Do we fill it? Probably. Looks like we have already pre-market stepped down into this region. This is going to be a big moment of truth and going to be a very nice platform for the trade. Since we've got this level here sort of holding up this mess and this level here holding this, I'm going to borrow this one and slide it down here. That's the great thing about motive wave charts. You know, they allow you to just pick things up and move along without any kind of troubles. How I do wish it had a snap to grid right there for me, though. Okay, so here we are looking for this to fill. That is about 30 cents wide. And so that space ought to give us a popping event. Where do you think, Anne-Marie? Well, essentially probably back into here. Unless we've started a move downward into a retracement event, which indeed is really a long time coming. Let's have a look at, let's use our component panel here and pop out a Fibonacci. Let's take a look at that, assuming that's the top of the wave. We really don't quite know if that is or not. To the base of this gap, we have wow, well, that's coming in at 23, isn't it? Okay, so we have this move, and I will go ahead and delete this since that's showing up there on that fib. We have that, yeah, really don't want that. We have this move right here coming up into this measure. Oh, look at all the confluence. All right, we fill the gap. We're definitely going to pop down into this region. If we are making a move on the pullback, folks, standard wave retracement, in waves that are continuing to move forward normally, that have good slope, will be anywhere from 38.2, 50 to 61.8. So we could have ourselves a nice little pullback into here, which would be ultimately fabulous. There is fib confluence here as well from this level right here, only because it doesn't give us this straight acceleration to the upside. Remember, the market is a lot like a runner, and if we've got sprinters, we know that they can't sprint for very long periods of time at, you know, Olympic speed. But if we've got distance runners, they can run for many, many hours just at a straight constant pace. The distance runner is the runner that can cycle back into retracement and continue to move forward. The sprinter, that's what we've got right now. We've got a sprinter, and it's moving very rapidly to the upside. Has a tough time maintaining that space over time, so this is natural. All right, we could come all the way into here and still have an uptrend. Now, just because we know that, does that mean that we leave our longs on? That would be no. Why do you want to give up all that profit? Just hawk it. And then when it comes back to there, watch for the bounce and see if it moves to the upside. All right? You don't have to try to eke every single penny out of the market, folks. There's plenty of money there to have, and you don't really need to think about it that way unless you're just whiz-bang awesome. Okay? And then you can do that. For the rest of us that are making a living in the markets and just working through the paces, we know where the best risk-reward events are. And if we lose this level, it's very, very likely that we drift into here. So that's a great risk-reward event. We've got another gap right down here. Still needs filling. Another very nice risk-reward event. Looks like the midline between 38.2 and 50. All right, so we've got that and so on and so forth. Step down through the paces. If we take a look at an hourly chart, makes it a little bit more granular. We can see clearly we've come down past the monthly VWAP. This is the weekly VWAP. I find these two much more usable in terms of the ability to trade through them. And so we are looking for here, we did, you know, if you do fall through one of these things, it's very likely that you come into the other once you've passed the halfway region between the two of them. All right, and so that is the case right here. We are coming down into this level. Do we pop up here? If we do, you know what to do. It's going to stair step up this way through the congestion. If we fail, you know that we've got that downside test of that fib, confluence with the pivot points and prior resistance. We've got a lot of gappy action that ultimately does fill. Okay? See these gaps? Fill. Gaps, getting ready to be filled perhaps. Gap, filled, gap, filled. Yeah, you get the point. They're going to get filled. We're just going to watch them like that. All right? Look at the volume. That's a lot of volume. That's more volume than we've had selling in a while. Okay? All the rest has been buying volume. The next closest one was this, and then it gapped immediately up. So this is a big deal right here. If it doesn't gap immediately up like we've got going on right there, we know that we've got a likely retracement. All right? Good luck today. Pay attention.